Boom. If you do next day expiration and the trade goes against you, at what point? Just based off invalidation points. So with this, with the SPY puts that we're going to go over, I said my stop loss was above 420, 422 right here. So we came up, we rejected again. We'll talk about this. Started coming down. We got our puts. Invalidation point was right above 422. But with the bounce on SPY, the reason why we started the position and then we were willing to add more at 420 was because the invalidation point was like 419.8. So a lot larger of a potential loss in this scenario. This one very limited because we got a really good entry. So stop losses are always based on where is the invalidation point. So zooming out to the daily time frame on SPY. Actually, no, it was, I believe, the 4-hour on SPY. So we're going to go over the bounce first, and then we'll go over the reject. Both of them were pretty straightforward. But looking at SPY on the 4-hour time frame, we can see that we had this area of previous resistance, right? Rejection, 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 tried to break above, failed, rejected, 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 and then we finally broke above this massive area of resistance without ever retesting it, right? So we had this large move overnight, which typically I don't like chasing moves like this in the overnight session, right? Because more than likely there's going to be a pullback. Now, if it broke above 423, maybe we could start looking for some other setups. But if you guys were in the YouTube live stream earlier, you heard me say, ideally, I want to see a pullback down to this area right here. So that's where that 420 to 420.72 came from. 420, just because, again, psychological area of support and resistance, intervals of 5 on SPY and QQQ are massive areas of psychological support and resistance. 420, 425, 430, 445, 450, etc. And then those intervals of 50 are even stronger, which is why I told everyone watch QQQ for a 350 bounce, because that was an interval of 50, right? And of course, I shouldn't have changed it because it's going to sit here and it's going to wait forever. There we go. So you see bounce 350 all the way back up at 351.75 right now. So that's why 420 was important. And then that 420.7 was that other area just where there was a lot of price action. So that ended up creating a zone of potential support, right? This was our zone of resistance, zone of support when resistance is broken. And because we haven't tested it yet, more than likely, remember, resistance becomes support, right? So as price came down into this area, I always break the chart down to a 1-minute time frame. I'm a huge fan of sniper entries. So I always want to break it down to a 1 minute, because with a 1 minute, you can use a 1 minute or 2 minutes, really up to you. I personally prefer the 1 minute, but with the 1 minute, you're going to see exactly how we start reacting to an area, right? So look at the 1 minute time frame and look at the volume on the 1 minute candlesticks when we dip down into this area. Look at the volume. Look at the volume. Look at the volume, right? What can we conclude facing these lower wicks, small body candle, large green body candle with a large lower wick, small red candle body with a long lower wick? What can we conclude based off the volume? There's a lot of buy orders being filled. And that was that's exactly what I saw going into this SPY trade. So as we started dipping down into the area, we got that massive volume push right here, or massive volume right here. Look at the volume compared to everything else, right? So you can tell, okay, there are buy orders right here. Now, just because this was a zone from 420.72 all the way down to 420, I didn't get full size because I preferred more, or most of my position to be added down here. And as you see, very heavy volume, and this thing just, it climbed to the upside. And I was able to ride this into VWAP, obviously taking profits on the way up. And I also mentioned that I would ideally like to see this thing go up into, like, I think I said 420.6, to then look for a reject. We're going to talk about why I took the reject. It was at a different area than I typically take, but it looked good. The risk to reward was there. And the reason why I exited this trade, one, is because it was coming up towards the reject. And two, we had VWAP right there. And then three, it rejected off of VWAP. Now, sure, it pushed a little, higher than that point. But again, I was focused on that reject to then ride it back down. So the way that I ended up finding this reject was if we go to the 5-minute time frame, and I actually ended up missing a trade earlier in the morning. It was just because the market just opened. It was a long weekend. That's why I didn't end up taking it. But the reject, I believe, was just, yeah, there to there. So it was a very quick right to 422.58 and then dump. It wasn't, something that I wanted to take that early in the day, but that was a trade that I ended up missing. That's okay. You're going to miss a lot of trades throughout your trading career. You just got to stay patient, wait for the right setup. So now the next trade that we ended up taking was right here. So as we see, I said 421.75. That was area 421.6 to 421.75. As you can see, we broke above it. Another fib that I started using was the 70.7 right there. Another trader reached out to me, Fibonacci trader reached out to me. He said, bro, use the 70.7. Trust me. I was like, all right, back tested it. It works pretty well. So broke above the 61.8. There was no entry, but look at this candlestick again on the 1-minute time frame going right up into that 70.7. So as we came up, we rejected it. Nice little doji candle. And then it started to break down in price. Hold on. Use pre-market high. Did we hit the 61.8 off pre-market high? Let's see. It might be right. Oh, there you go. Double the confluence. So I didn't use a pre-market high in that scenario. I just used the opening high right here. Either or, they both worked, right? If you wanted to take both of them and you see that they're both at that area, that actually adds even more confluence in this scenario. That I didn't even see, that 61.8 right there. So whoever just mentioned that, thank you. But we tried to break above it, immediately came right back down. That's ideally what I like to look for. As price started coming down, where's our stop loss? I said right above 422. All this thing had to start doing was start trading above 422. That is it. And we were stopped out of the trade. Again, stop losses are based on invalidation points. So this trade would be invalid above 422, and we would take that small loss. And then as you can see, this thing melted all the way back down into the lows. Broke below the previous low at that 420.4. There's just a massive amount of buyers down there. They don't want to keep it below. Obviously taking profits on the way down. And then as this candle broke below, I was hoping to take the final runners down into 420, reclaim the area, which is why I ended up getting my full exit. Now, had it broke and held below this, we probably would have tested 420. Unfortunately, that wasn't able to happen. But that was the reasoning behind both of those trades. Again, high volume into support, and then a nice little reject off the 70.7 and 61.8, depending on which one you ended up taking, with very limited risk. I would take this trade, 100 times out of 100, right? If this exact setup presented itself 100 times, I would take it every single time. I might lose 30 times on this trade. But if your risk is right above 422 and you have the potential to ride this thing all the way down from like 420 points or 421.75 all the way down into 420.2, that risk reward makes sense every single day or every single time. That was it. That's literally like my day trade setup. That is all. Break, reclaim fibs. Now, if they're, maybe there's an EMA there, maybe VWAP is there, it adds to the confluence. But that is literally all I look for is a break, reclaim, stop loss right on the opposite side of you. So any questions before I hop off and go enjoy the day? It's never like which fib to use, right? So it all depends on the price action. Yes, 0.707. It all depends on the price action when we get to the area. So in this scenario, I use the 70.7, that validates it, right? But if I would have put the 61.8 on, it just blew right through it, right? So I don't care about that 61.8. What about the 50? Blew right through it. I don't care about it. This validated the entry. So you never know which one it's going to bounce or which one is it going to reject. It just depends on how does it react when we get there. If it validates it, boom, I'm in. Stop loss. Always know where your stop is. If it breaks above it, take that small loss. I'll wait for the next one. Yeah, I always just watch fibs, and then mainly 1 minute time frame for the sniper entry. And then again, if there is, because I watch the 5 minute and 10 minute when I'm day trading. If there's a 5 minute 8 EMA, maybe a 10 minute 8 EMA, 21 EMA, VWAP, whatever it is, it adds to the confluence, but this is just mainly what I look for. That's why on this chart you only see VWAP. But yeah, I gotta get ready to dip out of here. Hopefully you guys found a lot of value in that that little 2 trade recaps. We'll try to do more of these here in the near future, but this was recorded. I'll have it uploaded later tonight and you guys will have access to it forever. But if you guys ever got questions, feel free to reach out. As always, trade safe, trade smart, and I will talk to everybody tomorrow. Peace.